What's up, everyone? My name is Ben. If you're new to the channel, I previously worked at JP Morgan as an investment banking analyst. And so I have a lot of thoughts about all of the different finance industries. And today I'm going to be ranking the top 15 kind of most common ones across 3 different categories, which are prestige, aka if you ran into a finance bro at a bar, told them where you worked, how impressed would that finance bro be? Then I'm going to go into compensation and then hours. And then at the end of the video, I'm going to combine all of these 3 factors and give you a total overview and comprehensive ranking of all of the different industries based on the 3 different components I just mentioned to make things kind of more evened out and fair. I think what you'll see is that you're going to be very surprised more and more as this video goes on, because this first part where we're going to talk about prestige is pretty self-explanatory, and a lot of people kind of view things similarly. And so this shouldn't be too much of a surprise, and try not to get too offended by this video, because maybe if you probably do, you probably work in private wealth management, because that is in the F tier. It's an industry that, you know, you can definitely make a lot of money if you have a lot of clients and you are really good at your job. So don't get me wrong, you can make a lot of money in any of these industries, but it's really the easiest to kind of break into. I got a summer internship my freshman year at Merrill Lynch Private Wealth Management, and they didn't really even interview me. Next up, we have commercial banking. So this is where you're providing your clients with financial solutions, and a lot of times they're very prepackaged goods. There's not a ton of analysis that you really have to do. And so the work is not super hard, not super challenging to really break into either. And then next on the list, we have tax/audit. So typically the best you can get if you work in this industry is working at the big 4, PwC, Deloitte, KPMG, etc. Also still a great career. So don't get me wrong. If you work in this industry, then you definitely can have a nice, very stable job. But I remember when I was looking into these industries, not that hard to get into if you go to like a decent college, and then the interviews are all just like purely behavioral, not super technical either, which I think kind of speaks to the level of difficulty to kind of break into these industries. Next, we have FP&A, which goes into our C bucket here. So FP&A is where you're actually working at a company and helping with forecasting, budgeting, etc. And honestly, a lot of times people who are working in an S or A tier company can actually work in FP&A and lead it for a company. So again, nothing wrong with this industry, but then it's just not as high paying and it's not as hard to really break into as some of the other industries that we're going to go into a bit later. Next on the list is investor relations. So this is where you're helping usually an investment firm, so like a private equity or venture capital or hedge fund, and you're helping sell your fund to potential investors, and you have to put together a lot of like presentations and stuff like that. A lot of times people who previously worked at a fund or in banking work at investor relations because they want a more chill job. And so it still can be pretty decently paying. I think it's actually one of the more underrated industries in finance because not a lot of people know about it. But with that said, you go to this industry because you want something more chill, and the higher ranked industries are definitely not chill. So let's go into some of those. So corporate development, this is a very common exit opportunity for investment bankers and some who are working in private equity who want to move into industry. But essentially what you're doing in corporate development is you're finding new M&A targets for your company. So you may work at corp dev at Microsoft and you're looking for potential new investments, and you may work with bankers to kind of figure out what you should buy your potential new companies at and integrate them into your larger company, which I just said is Microsoft. Next on the list, we have asset management. And in this industry, you're not actually looking and doing deep analysis on, let's say, individual companies like you do at a hedge fund. Instead, you're making broad allocation decisions based on what your clients need to do. And so it's not a super technical type of industry where you need to do tons and tons of analysis. That's why I put that there. Next on the list, we have sales and trading. And so this is an industry that was a lot more popular, but it's shrinking quite a bit nowadays. And you'll see in the compensation section that sales and trading, you actually still do get paid quite a lot. But because it's not as relevant anymore, that's why I personally view it more in the B tier. And then next on the list is equity research. And in equity research, you're doing deep dive analysis into the companies that you cover. You're building a very detailed financial model that you update every quarter for your company when they release earnings. I just put this in the B tier because Also, equity research is a very shrinking industry. You kind of get pigeonholed because your exit ops are not as great as some of the other industries we're going to cover. And so asset management, sales and trading, equity research, they're all kind of considered to be very, very kind of like similar level of prestige. And these three are a little different from corporate development in that these are three departments that you work at in a bank, whereas corporate development is in a totally separate, different company. And then next up, we have private credit. I also think private credit is a very underrated industry. It's getting very, very hot these days, and the pay is quite good. It's just that usually if you could choose an exit opportunity after, let's say, investment banking, you wouldn't choose private credit, and you certainly wouldn't choose asset management, sales and trading, or equity research. You would never kind of go to any of these three industries because that would kind of be a downgrade. Anyway, that actually leads to our A tier, which I will put investment banking in the A tier. And while the investment banking industry does get a lot of hate, recently I saw JP Morgan getting a lot of coverage because it's making like a maximum number of hours be 13 hours a day, which is like a 9 a.m. to 10 p.m. day, which is actually pretty good. But anyway, investment banking is a gateway for a lot of other industries. You can also make a ton of money in the industry. There are also really, really top firms like Catalyst, Centerview, the top bulge bracket banks, where if you're working there, no one will really look down on you, especially if you just decide to stay in banking instead of working in the buy side. And the buy side, of course, is where all the prestige really, really lies. But I'm going to be maybe a little bit controversial. I'm going to put venture capital in the A tier and not the S tier. Personally, the older I get, the more information I get about the finance industry and venture capital, the more I kind of see VC as a just spray and pray, and a lot of people just get really, really lucky versus them actually doing a lot of really detailed, thoughtful analysis and then choosing the right companies, because there's so much luck involved with VC. So for example, Masayoshi Son made a super great investment with Alibaba, right? And he made tons and tons of money, set up SoftBank Vision Fund, which is like $100 billion growth/private equity firm. And that investment firm's not doing super well. Maybe he's old now. There's a lot of potential reasons, but I guess what I'm saying is while there are a ton of great, smart people in venture capital, I personally don't really think that they're as impressive as the average person in a private equity or hedge fund or something like that. And so kind of related to that, I will put growth equity, in the A tier as well, because it's just a step above venture capital. I do think that there is a little bit more analysis that you do have to do in growth equity, but especially because it's not as well known as an industry, I wouldn't put that in like the top of the prestige kind of tiering, if that makes sense. So that leaves us with private equity at the very top in this industry. So in private equity, what you're doing is you're buying out companies, funding those transactions with a ton of debt, operating the company and making improvements, and then selling it for an investment. Usually an IRR of 15 to 25% is what you're aiming for. And then at the very top, we have the hedge fund as well. Super, super, super hard to get into. A lot of times a prerequisite is working in investment banking or private equity or a different hedge fund. Those are pretty much the main ways you really break into a hedge fund. And you're dealing with tons and tons of money, lots at stake. If you don't do well, then you could get fired pretty much at any moment. So you really, really need to be at the top of your game. And so this is kind of my prestige ranking for these top 15 industries in finance. Now, before we move on with the rankings for compensation, if you're watching this video because you're interested in breaking into private equity, the S tier type of industries, then you may want to check out the recently announced Wharton Wall Street Prep Private Equity Certificate Program. And Wharton is actually where I got my MBA. This program is sponsored by top firms like Blackstone, Carlyle, and KKR. And over 8 weeks, you can learn at your own pace through this online course that's taught by Wharton professors, Wall Street Prep's PE program director, and real estate PE investors, including David Rubenstein, the founder of Carlyle, and Martin Brand, the head of North America PE at Blackstone, who will cover topics like the PE deal process, valuation, how to think like a private equity professional, and more. By completing the program, you also unlock access to the alumni member database, fireside chats with PE investors, and exclusive networking events with the world's top private equity recruiters. If you are interested in this program, be sure to use my code rareliquid to get up to $500 off. I'll leave information for all of this in this video's description, and I'll also be including a link where you can download a leverage buyout model, which is what private equity associates and analysts build, just so you can kind of get a taste of what you really do in the industry. And I'll leave all of this in this video's description. All right, with that said, let's now go into compensation rankings. And for this, because things change so much depending on how long you are at a certain firm or industry, I just asked ChatGPT simply, give me the average compensation for the average 25-year-old in each of these industries. And I thought that was a pretty fair way to kind of rank these. And of course, I kind of did a sanity check because I know roughly how much you should be making in these industries. And so I'll have something pop up right here for you to kind of see how much you'd actually be making in each of these industries. And let's now start ranking them. So for FP&A, that's actually at the bottom of the list, usually around 70 to 100K at the age of 25. So average around 85K. And then commercial banking, also at the bottom of the list, usually around 80K. Next, tax or audit, usually around 75K or so. So these are kind of at the lowest tier. And then asset management, usually you're making around 105K if you're 25. Private wealth management, this is what can be a little bit surprising, is that even though private wealth management may be lower in prestige, and a lot of these other companies can be very, in different parts of the prestige ranking, the actual amount that you earn can vary quite a bit. So really, it's not always about prestige. That doesn't always mean you're going to be making way more money. So next, investor relations, usually around 100K. And then in corporate development, you'll find yourself making around 120K. Next is equity research, which you can find yourself making around 120K similarly. And then we have venture capital and sales and trading at around 140K. So I think this is something really interesting. So venture capital, even though it's one of the top tier, more prestigious industries, pays way less than a lot of other buy-side industries like private equity, hedge funds, also definitely less than banking for the most part, unless you're very, very senior. And what may be surprising in sales and trading, you actually do get paid quite a bit still. So that's kind of in our B tier. And then let's go into our A tier, which I'll put private credit, growth equity. And for these, you can find yourself making around like 160K. And then in our S tier, we have investment bankers. Banks have really stepped it up quite a bit, especially at the junior level. And so at the junior level, you're pretty much going to be making the same as you would in private equity, maybe a little less than a hedge fund. But at a hedge fund, your bonus is really dependent on your performance and your fund's performance, and it could be zero. You have a really, really bad year. With that said, in our S tier, we have investment bankers, private equity associates, and then hedge fund analysts. So if you're at that level, you'll probably make around 180 to 200K at least. If you're at the age of 25, that's kind of more on the average side, but you can definitely at that point probably be making well over 300K. So these are the rankings for compensation, again, at age 25. And I think pretty interesting because a lot of things have kind of moved around, and things are going to move around even more as we go into hours and then the total rankings across all the different components we've been talking about. All right, let's now go into the great equalizer, which is work-life balance, aka what kind of hours can you expect working in each of these industries? And so where is work-life balance the best? And of course, there's going to be kind of an inverse relationship where the more prestigious and higher paying companies are not going to fare as well for these rankings. So what I did for these rankings is I kind of got the min and the max hours that you can expect to work in a week in each of these industries. And then I calculated the average just to kind of make things fair. Of course, things are always up and down at a lot of these companies, but at an investment bank, you can expect to work 70 to 100 hours a week. Average is around 85. And so banking ranks at the lowest of our work-life balance rankings. It pretty much doesn't get any worse than investment banking. And then at a hedge fund, you can expect to work around 60 to 80 hours. So that's kind of in our D tier. And then in private equity, 60 to 90 hours. So that is about 75 hours a week. So these three industries are pretty much where you're going to work the hardest. And then next up in growth equity, you can expect to work about 50 to 70 hours. So let's call it 60 on average. So that's in our C tier. And very similarly for equity research, you can actually expect very similar hours of 50 to 70, and same with private credit as well. And so private credit actually, I feel like is one of the industries that's not very well known. So it's not as prestigious, but pays pretty well and the hours are pretty good. So I feel like that plus growth equity are two industries that I think are underrated. Equity research, while I also think is overlooked quite a bit, the industry is shrinking a lot. And so I wouldn't really recommend equity research to anyone really thinking about the industry, unless you love the industry. Anyway, let's next go into our B tier, which starts off with asset management, usually around 50 to 60 hours a week. And similarly, that's also similar for sales and trading as well. So call it about like 55 hours. And so these two industries, much better kind of work-life balance in general. And then in our A tier, we have venture capital over here, which and in that industry, you're typically going to be working 40 to 60 hours. And that's really the same with corporate development and tax and audit as well. So tax and audit, the only real thing that I have to mention is that a lot of times you're going to be working pretty long hours, but you're going to have like big ups and downs, right? When you have big quarterly pushes, then you may be working like 70 hours and you're going to be working quite a lot, but during the more down season or whatever, you're not going to be working as much. And so that's why I put it there. And that actually leaves these last four industries here. So FP&A, about like 40 to 50 hours. Actually, all of these are really like 40 to 50 hour types of jobs. And so they really shine and are in the S tier when it comes to work-life balance. These are the industries where you typically will not really be working that much. And so as you can see, whereas for the prestige rankings, we didn't really have these really anywhere towards the top. When it comes to work-life balance, they're at the very top. Okay, so let's now talk about total rankings for these top 15 finance industries. And let's now categorize them based on the three different factors we just talked about, which are prestige, compensation, and work-life balance. So starting at the bottom of the totem pole, I guess, we have the industries tax and audit, commercial banking, and private wealth management. And so these are really brought down due to low prestige and comp, but are kind of boosted quite a bit by their great work-life balance. So really it depends on what you're really aiming for. But with that said, in terms of total rankings, these all scored about like a 5 or 6 total. So they're at the bottom here. And then next in our D tier, we have asset management, equity research, and FP&A. So these three industries all scored a 7, and they're a little bit kind of just very mid in general. So asset management and equity research are kind of just like very, very average in terms of prestige and comp and work-life balance. FP&A, good work-life balance, but pretty low on comp. So that's why these kind of end up here where they are. And I think this is a little bit interesting because even while being more prestigious, asset management and equity research kind of fall because of the other factors. Next, by itself with a score of 8 is investor relations. And this is why earlier in the video, I said I thought investor relations was kind of an underrated, overlooked industry because while it's not as prestigious, because it's not as well known and people go there to chill, you still get paid a decent amount. And so it's a great kind of exit op if you don't want to work that hardcore finance life, but still get paid decent money. Next up in the B tier, we have 4 different industries, which are corporate development, investment banking, sales and trading, and private credit. And I think this row is maybe the most interesting because it might be a little bit unexpected and there's very different reasons for these. So for corporate development, I'd say whereas it doesn't have the most prestige and has slightly lower comp, it has really good work-life balance. Banking, while it has really, really good prestige and comp, has terrible work-life balance. Sales and trading is just pretty average at everything in terms of reputation, compensation, and work-life balance. And then private credit, I think, is kind of an underrated, overlooked industry as well, as I kind of talked about, where it has decent prestige, pretty good comp, not the worst work-life balance. And so these all kind of score a 9 in very unique and different ways. Next up in the A tier, we have growth equity by itself with a score of 10. And what really helps growth equity is having pretty good prestige and compensation and not being the worst in terms of work-life balance. That pretty much is what helps growth equity get a score of 10 and secures the A tier spot. So then that leaves us with the 3 buy-side industries that most people know about, which are hedge funds, private equity, and venture capital. And I know you may be looking at these industries and thinking that these are the most well-known ones, and of course they are. But I would say that things are approached a little bit differently for hedge funds and private equity versus venture capital. So the first 2, really good compensation and prestige, whereas venture capital doesn't have as much compensation, but has pretty good work-life balance. And so these three are the ones that end up with a score of 11 and really top out our list and kind of are the S tier finance industries to really go for if you want to use this kind of as a guide. Now, before I let you guys go, I wanted to mention one quick thing, which is that rankings at the end of the day are pretty silly. I did my best to be very, very unbiased and try to give you a full picture across various different factors. So hopefully this video was helpful, but really any of these industries is what's most important is you doing what you truly enjoy, because that's how you're really going to be successful. And also, people are always aiming for different things. So having the most prestige is not going to make you happy, most likely, unless that's really, really what you want. Honestly, even making the most money is not probably going to make you as happy as you might think. So hopefully this was just like a fun little exercise. You can see how things shape up across these different factors and for these different finance industries. If you have any questions about any of them, let me know down in the comments. And thanks, guys, and peace out.